If you've ever sent a package or don't live under a rock, chances are you've heard of FedEx. FedEx has four different segments, which are FedEx Express, Ground, Freight, and Services. FedEx Express is the world's largest transportation company. Their direct competitor is UPS, although they differ by the customer demographic they serve. In 2023, the company announced a plan to consolidate all of their segments into a brand that would be named FedEx One. The stock was up 8% on Friday after announcing a $5 billion share buyback being one of the biggest proponents. But is this all just some hype? Well, let's compare an important ratio with their biggest direct competitor. The current ratio is very important for trucking and logistics companies, and we can see that FedEx does slightly better than UPS. This can allude to the idea that FedEx manages their operations better, which is essential for cutthroat businesses such as logistics. When we look at their four revenue segments deeper, we find that in 2023, the FedEx Express segment experienced a minor slowdown, while all the other categories basically stayed the same. They cite weakening volume and pesky exchange rates as the reason for this decline. The most interesting part of their 10K is their contingency section. In here, they explain how the company is facing lawsuits over not actually employing their drivers. Many might not know that the company classifies its drivers in the FedEx Ground segment as independent contractors. This is very similar to Uber, as both the companies are reluctant to onboard certain employees in the business. Both companies avoid employing their drivers as this would entitle them to certain benefits and eat into their bottom line at the end of the day. The chart is trading at near all-time highs, which is similar to a lot of technology stocks in the market. The $300 zone looks to be resistance and is likely where the stock may travel to next. A break above that zone could give way to more upside for FedEx stock. An area of possible demand could be the $275 zone. This spot was a previous rejection high turning into a support, also known as a break and retest. It will be interesting to see FedEx annual report as investors will be looking to see growth in their four revenue segments.